Well, hello and a very warm welcome to this webinar, Spanish Bank Performance and Shifting Competitive Dynamics, brought to you by Scope Ratings. My name is Keith Mullin, and it's my pleasure to be moderating today's session with our special guest, Carola Saldias from Scope's Financial Institutions team. Now, the Spanish banking sector has, of course, featured heavily in the news recently around BBVA's efforts to acquire Banco de Sabadell. We'll, of course, touch on that, but as the session title suggests, we'll also look at more broadly competition in Spain, as well as profitability, efficiency, asset quality, and capital. Now, in a second, Carola will take you through a short presentation. After that, we'll be delighted to take your questions, so please type them in as we go along, and we'll do our best to answer them. Today's slide presentation will be available for download at the end. Also available will be Carola's recent Spanish Bank Quarterly, and I'll explain how to download both at the end of today's session. So that's it from me. Let's get started. Carola, great to see you. Let me hand over to you.
Thanks, Kit. Thank you very much for the presentation, and welcome to everybody that is joining this interesting webinar. The objective today is really to discuss a little bit of the Spanish banking sector performance in 2023 and what we expect for 2024, and also to tackle on the shifting competitive dynamics that we have seen recently with the hostile takeover that was launched by BBVA to the potential acquisition of Banco de Sabadell. So I just want to start giving you some, indications of how, the positive performance of the economy is really driving also the very positive momentum of the banking sector. We know that Spain is really, in terms of GDP, it's growing above the EU average. We have seen for 2024 expectations probably 1.9% compared to 1% for the European average, and also somehow a different expectations for 2025 with levels around 2 versus 1.8 for the EU average. This economic growth is really supported by a strong level of net exports, also a very strong activity in terms of tourism, and growth coming from the implementation of the EU Recovery and Resilience Plan. Labor market also, as you see here from some indications about the employment rates, has been improving significantly. We have seen historically low levels of unemployment today compared to what we saw probably in the past 10 years, and this is really driven also because of a very strong modernization and a renewal of the institutional framework. So this is really setting up a very active and dynamic economic environment for the Spanish banking sector, that it's leading us to what we see very solid competition, larger players that are really consolidating their operation in the market. We know that the four largest players consolidate 65% of the market share in terms of total loans, and have also a very relevant share on deposits. It is very interesting to see, of course, that we have within the top four players, we have two types of banking groups. Two, Banco de Sabadell and CaixaBank, that are somehow domestic players with, let's say, banking groups that are mostly operating within the EU and significantly, of course, with a very large domestic footprint. And the other largest two that are Santander and BBVA, that have very strong international operations, but also have a very strong footprint in its domestic market. We see, of course, some balance sheet differences in terms of market shares in lending and market shares in deposits. But this is also providing the differentiation that all those four groups have in terms of their business model, and that taking, let's say, the benefit of this very important domestic activity and growth that we see in the Spanish market. So, of course, how this translates into the banking sector. And what we see, of course, is significant improvement in profitability in 2023. Of course, this is coming from the high interest rate environment that has been driving increase in net interest margins. We see, of course, when we compare with the past 10 years, let's say, in which we faced a very low interest rate environment that was really adding pressure to margins in banks, we saw profitability somehow very difficult to reach, say, double digits, closer to 10%, but almost not even there. And this year, 2023, we see significantly improvements, as you can see in terms of, let's say, for all banks, profitability has been almost above 10%. And this is also something that we expect will continue to happen in 2025 because we expect a scenario of high interest rates for longer. The pass-through of this interest rate into deposits that could be, let's say, somehow dragging down the, let's say, the benefit for banks, it's almost complete. Was very active in the second part of 2023, and this is also setting up the, let's say, the level of net interest margin that somehow we will consider will continue to be at, let's say, high levels for the rest of 2024 and the beginning of 2025. Revenues coming from other activities or fees, commissions, payments has been very flat, and this is much more related to the, let's say, the slowdown of the consumption and activity that we have seen in 2023 in terms of transaction and operations, card transactions, fees related to financial advisory, etc., etc. But we expect that this will pick up already in the second part of 2024 and already in 2025. Of course, this is not a significant element for profitability, and really profitability has been driven because of this high interest rate environment. This is leading, of course, to increase in organic capital generation for banks. Because, of course, let's say the improvement in profitability and on bottom line, and this has been translated to CET1 ratios growing across banks and also at EU levels. This is not, as I said, this is not a phenomenon that it's only happening in Spain, but we see that banks are really improving capitalization levels with the capacity also to remunerate shareholders properly with significant high levels of dividend payouts and share buybacks. The organic growth that we see in CET1, we expect will remain at least for the short, medium term, but we need to take into consideration that let's say the Spanish banking sector and the Spanish banks have targets that are now below what we see in existing CET1 ratios. So we should expect also some, let's say, reduction to target levels in the medium term. This is, let's say, this performance, this improvement in profitability, solid organic growth in capital, it has been also supported by asset quality and efficiency. And here we have a very interesting phenomenon in terms of a very strong asset quality, something that we were not expecting that much at the beginning of the year, because we were considering that the financial pressure of high interest rates will really affect households and corporates. However, that phenomenon was not really, let's say, translating into a material deterioration on asset quality. And we have seen really NPLs and stage 2 ratios with very little change compared to the end of 2023, and with not really the deterioration that we should have expected. For example, we see NPLs at really low levels across the sector, with 3.4%, 3.5% for the Spanish aggregate, that it's pretty much the lowest level after the financial crisis. In terms of asset quality for households, that we could expect that the financial pressure with high inflations and let's say not significant salary increases could add some pressure to households. In that context, we haven't seen significant deterioration of NPLs on households, with levels around 2.4, 2.3%. That is still very, very positive the, let's say, the market conditions that we see today. This together with also record efficiency after years of restructuring. Here it's important that we take into account that these two groups of banks, the, let's say, large international players versus the domestic players, have let's say, a dynamic of efficiency ratios and restructuring that has been very different. In the case of CaixaBank and Banco de Sabadell, for sure we have seen, and you can see here from the chart, that there is a very strong improvement in efficiency. There is a restructuring and, let's say, modernization, and a focus on really be much more, let's say, efficient and have a let's say, a much more light structure to operate the business, compared to what we see with Santander and BBVA, that are coming already for this restructuring that happened, let's say, earlier, and it's also affected by the different operations that have in different countries. So we see here a significant difference in terms of efficiency. However, for all banks across the sector, we see that the increase in revenues and the, let's say, the possibility to, let's say, have the effects of restructuring under now a high interest rate environment is allowing for efficiency ratios to be very close to the, let's say, the targets of 40%, and very far from what we have seen in the past levels of 60, also closer to 70%. This is setting up, of course, this very positive environment for the Spanish banking sector today. And it's allowing for what we consider a very strong dynamic in terms of competition, in terms of developing their business model and developing their market position in the different sectors that they are let's say, targeting effectively in the domestic market. Here we see that, of course, there is a different dynamic compared to the different sectors that Sabadell, BBVA, Santander, and CaixaBank target. We have banks that have a significantly higher component of mortgage loans, and that, let's say, cover much more the individuals and retail loans, that are trying to take advantage of this very positive momentum, with also growth expectations for 2025 to pick up after a very flattish 2023 and first half of 2024. In terms of other banks, in the case of Sabadell and BBVA, with a significant portion of SMEs and corporates, we see also the expectations of higher investments and this, let's say, GDP and economic activity that it's picking up, and it's, let's say, making the difference compared to what we see in other European countries. This is allowing for sure to competitive dynamics in terms of lending to be much more focused. We see some banks that are targeting, let's say, the development of consumer loans that are growing little by little after probably years that were not that much of an interest, also with very, let's say, low interest rates. Now this is a sector that is becoming much more active, and we see banks that are targeting this sector very, very thoroughly. In terms of mortgage and SMEs loans, of course, there is, let's say, growth opportunities now after the very flattish year of 2023. And we expect these dynamics to continue and to lead let's say, the different growth targets that banks will have in their lending books. And I think that this is very, very interesting for us to set up, let's say, the growth that we expect in business models and the potential for consolidation on these specific sectors. The economic activity of let's say, of the Spanish market is really leading above what we expect in other European countries. And we expect this to really, let's say, be the focus for 2025 as well. Thanks again for listening to this presentation, and now I'm open for Q&A.
Great, thank you very much for that, Carola. I think you covered a lot of ground there. Look, I've got a few questions lined up for you around some of the things that you already commented on. But generally speaking, it sounds like a real good news story. Strong economy, everything's strong profitability, no deterioration in asset quality, etc. Good. So I'll come back to one or two of those things, but let's get straight to the item that's in the news. So BBVA is in the midst of a takeover. I want to say battle, but that's my word for Sabadell. Can you talk about that in terms of what you think the drivers are for BBVA and how that might, if it were to go through, how it might change the competitive dynamic in Spain?
Yeah, well, that is, of course, a very interesting question. It has been in the news for a couple of weeks already, and this is also related to this business model differentiation and the possibility of, let's say, consolidation in very attractive markets. We know that Sabadell has a very large portion of mortgage loan and SMEs that are somehow the ones that will drive the, let's say, the activity in the second part of 2024, and as I said, in 2025. BBVA being an international and large player, of course, with a very interesting and very important domestic footprint, has also a portfolio, an international portfolio that somehow it's larger than let's say, the Spanish portfolio itself. So a way to consolidate for BBVA and to gain a significant market share and improve the footprint in the Spanish market, the acquisition of Sabadell makes sense. And that will allow also BBVA to be a stronger player within its domestic market. In the case of Sabadell, it's somehow a very interesting story of how a bank, after, as I said before, domestic players that were facing restructuring and, let's say, some challenges to be much more productive, efficient, and grow, has been the positive result that we have seen in 2023, with return on equity above 10%, with an organic generation of capital that has been one of the strongest. And it's a very interesting market footprint because of the, let's say, the specialization of SMEs and also the consolidation in specific regions in Spain. So this allows for BBVA and for Sabadell to get some synergies and become a stronger player. Of course, this puts on the competitive dynamics that a larger player and a stronger player in the domestic market will be also a much more aggressive and active player in comparison to what we have seen in the past. And this will lead some dynamics that we expect are very interesting in terms of probably pressure on margins and grow targets that are much more, let's say, larger than what we were expecting before this, let's say, the announcement of this transaction.
Okay, so I guess the obvious lead-on question, which I'm sure you're expecting, is: do you expect to see more consolidation in the Spanish market? Because one of the things you pointed out in your quarterly, which I say will be downloadable later, is that the market is, I think you use the expression, barbelled, with some very large banks with a big market share and others from smaller banks with specializations, regional or whatever. So do you think this might lead to, I wouldn't say a spate of takeovers, but do you think it will lead others to at least review the opportunities?
I think that here, as we correctly saying in the quarterly research, there is this, let's say, two type of players in the domestic market. We see the larger players, the four banks that we focus our presentation here, that are, let's say, at country level very active and can benefit of, let's say, a very large branches, large operations, and let's say, a franchise that has been historically very solid. We see also smaller players with market shares below 5% that at the end are significantly, let's say, different from a bank that has a 20%, 15% market share. But those players are much more focused on niche sectors, regional geographic diversification or some specific, let's say, markets that have their own peculiarities. And here, with this high interest rate environment, with this very active economic, let's say, momentum, the benefit for all players is that they are getting stronger in terms of profitability, reaching levels of, as I said before, capital that has not been seen in the past, and allowing also to have eventually the resources and the support of shareholders to go and eventually consider, say, potential acquisitions. But that need to be in the context also of a franchise that makes sense, and that they know that at the end, this, let's say, the differentiation on these different geographies or the regional, let's say, positioning and target markets need to be, let's say, something that they can maintain in the long term. Cannot be just an acquisition that will just last a couple of years, and that at the end of the day, let's say, the portfolio will just be reduced again. So this is something that they need to evaluate. And I think that now the ability of the banks to have the possibility to think about this further consolidation, it's much more possible because, let's say, the profitability has been allowing to have the resources to do so. And I think that that's the key. Now, of course, BBVA has been the, let's say, the first mover, and we still need to wait and see what will be, let's say, the result of this potential transaction.
Indeed. Okay. I'd love to ask you what you thought the prospects of the deal going through were, but that's an unfair question, so I won't ask you that. But just moving on to some of the factors you talked about. You talked about the efficiency of the Spanish banking sector generally, and which I think you said they were quite efficient. And you referenced some earlier restructurings. Is there any more, do you think, that they are doing or can do on the cost side of the equation? Are they operating at optimal efficiency?
That's a very unfair question because I cannot say that they are operating optimal. But I think it's we have seen after the COVID pandemic that modernization and digitalization, it's a significant, let's say, challenge for banks. Sorry, my camera, it's on and off. I don't know why. Yeah. What we see is that let's say, the use of branches is less and less a need, and that's across the banking sector. Of course, there are some banks that will continue to have much more, let's say, physical presence because it's the strategy. But what is interesting is at the end of the day, we see a phenomenon in which digital banking is becoming the main channel for financial services. And I think that in this case, Spanish banks are moving into the right direction, and probably we're a little bit slower compared to what we see in other geographies. The Nordics, for example, are very, very digital, and pretty much, let's say, the physical presence of banks is very limited because they target very, let's say, virtual channels, pretty much as the main way of developing the business. And this is something that still there is room for Spanish banks to move towards that direction. We do not need to forget that this very strong efficiency is, of course, driven because of the significant revenue base. And of course, now is the possibility for banks to have let's say, the room and the earnings to invest, to have this efficiency as a steady state and something that they can maintain, and not just something that it's temporary because this increase in revenues. And now the digitalization and the modernization of the banking, let's say, the banking activities in the Spanish market, it's something that is still developing, because they were focused on other things before. They were focused on really pretty much reducing the physical network to the levels that were okay, that were still providing the, let's say, the physical, let's say, the physical place for customers to go. But now probably we're going to go into the second stage, in which they were going to reconsider if these, let's say, networks are really at the, as you said, optimal level. So there is still some room for efficiency. I do not think that in terms of efficiency, we're talking now about reducing even more the cost to income ratio, but to really reach a level in which this efficiency is here to stay. And
Okay.
with that, for sure, I agree with you that probably this optimal level is not yet there, but mostly related because there are still investment that they need to do. And the benefit on revenues, it's something that for sure in 2023 and 2024 will be there as let's say, a significant benefit that we shouldn't expect will remain for the longer time.
Okay. And thanks. And given where they are in terms of capital and profitability, what are your thoughts about whether the Spanish banks are going to maintain the current levels of payouts to shareholders, etc.? Are they going to
I
continue?
think we have seen that shareholders are very happy in the last 12 to 18 months all over Europe because of the high level of, let's say, share buybacks and dividend payouts. After also years in which was very limited because of the, let's say, the limited profitability of banks. So I think here we have the trade-off of after years of somehow very, let's say, flat or not as attractive as it was for other sectors, let's say, remuneration to shareholders. Now the possibility that they can be, let's say, remunerated as they were expecting probably for a long time already.
Yeah.
So this is at the end, provided that these payouts do not affect and do not, let's say, erode the possibility to continue grow organic capital. That's let's say a pretty very clear equation, and for sure for 2024 this phenomenon will continue.
Okay, thanks for that. Just in terms of capital, I guess we've got the announced increases in the countercyclical buffer as well. Generally speaking, on capital, you said that the capital ratios are pretty strong. Any kind of particular issues of note regarding the countercyclical buffer? Is that going to be a slam dunk? Any kind of
I think that in this case, the Spanish regulator is catching up and it's aligning to what we have seen in other geographies. And this is again a result of this, let's say, improvement and higher, let's say, profitability. It's allowing the regulator to somehow ask banks to say be more cautious and take the opportunity to increase, let's say, capitalization, not voluntarily, but the regulatory pressure, in a time in which profitability is there. And this is something that, as I said before, we have seen in other geographies, and it's something that it's positive because at the end of the day allows for say banks to have build up higher capital buffers when they have the resources to do so.
Yeah, no, absolutely it makes sense. So I've got a question. I think you've kind of already covered it, but I'll perhaps ask you to recap briefly. You talked about the profitability drivers being predominantly net interest income, but if you were to look forward, is it the case that the kind of NII peak has already been reached, and do you expect the driver to be as powerful as it has been, the NII driver to be as powerful as it has been in the last year or so?
I think that here let's say the statement is we expect a higher interest rate for longer, and I think that's also across, let's say, market participants, that somehow is what we expect for 2024 and the beginning of 2025 eventually, and that means that NII and let's say revenues coming from, let's say, interest margins will continue to be high. Probably we reached the peak in 2023 because, let's say, the pass-through to deposits was not as in full as it is today. But I think that in 2024, we're going to face a scenario that bottom line results are not going to be as different from what we have seen in 2023.
Okay, and then so your expectation for return on equity would be double digit still 2024? Would that be the sort of level that you would expect?
Based on what we have seen in Q1, we need to wait for Q2 now. In a couple of weeks time, we will have the release of the, let's say, Q2 results, and then we're going to have much more, let's say, information to see if the, let's say, these expectations are true. But for now, based on Q1, it looks like return on equity will be at, let's say, double digits for sure for 2024 as well.
Okay, fantastic. Okay, Carola, I've actually, unless that you've, I've exhausted my questions. So I wanted to ask our viewers, we'll close in a couple of seconds if there are no more questions. So if you do have a question that you'll be waiting to ask, if you could ask it now, that would be fabulous. In the meantime, while you're cogitating about whether you want to ask a question, let me explain quickly how to download the two files I mentioned at the beginning. So at the bottom of the screen, you'll see an apps button. If you click on the apps button, and then you'll see handouts pop up, and you click on the handouts button, and there, as if by magic, you'll see two files, which is the slide presentation that Carola went through earlier, as well as I mentioned the most recent Spanish Banks Quarterly, which came out recently. And of course, once we have the Q2 results, and once Carola's had a chance to digest, we will be coming out with, by definition, another quarterly at some point in the near future. So there are no more questions, Carola. So let me thank you for your time and going through the presentation and your very, very insightful and full responses to my questions. So thank you to our viewers for watching it, for dialing in and watching. We will be back soon at some point with another banking webinar. And so for now, it's goodbye from us and hopefully a very successful rest of the day.
Thank you very much, Keith.